Hello everyone and welcome to Checkout.com's virtual panel discussion. Today's session will ask, can stablecoins revolutionize e-commerce? We're delighted to be welcoming Adidas and Circle to today's conversation, which is being moderated by our head of crypto and digital assets, Max Rothman. I'd now like to invite our speakers to join the stream.
Awesome. Hello, and welcome to the virtual panel discussion, Can Stablecoins Revolutionize E-commerce? A very large statement to have, and thanks for joining us today to talk it through. So I'm Max, as the intro said. I head our crypto and digital assets team at Checkout.com. And for those who aren't aware, Checkout is a leading global payment solutions provider, and we're working with innovative global brands like Netflix, Crypto.com, Farfetch, Klarna, to manage their digital payments, doing that by empowering tailored solutions for enterprise businesses to drive more value and better customer experiences during the checkout process, which we think, at least at Checkout, starts on the payment side. So a couple of housekeeping notes for this talk. The objective is to have a very productive, candid discussion about the key issues in the crypto space, or I should say, the problems at which it solves for the e-commerce space. And if this is your first virtual panel, thanks for joining. We're looking to take around 50 minutes for this, and we'll try to do our best to keep to time. We want to have a Q&A at the end. It starts with the people actually engaging in the talk. We have some amazing panelists sitting with us as of right now. So please do utilize their knowledge to ask them anything you like, and we'll try and tackle as many of those queries as possible. Without further ado, I would like to, I won't introduce myself, I'll let them introduce themselves. Our expert speakers on the panel to talk about their roles and their involvement with crypto. I think we'll start just on my right. Zhao, do you want to kick things off?
Sure, thanks for having me, Max. So I'm Joao Reginato, I'm a VP of product at Circle. And Circle, for those who don't know, is the issuer of US dollar coin, or USDC, and Eurocoin, which are two of the leading stable coins in the world these days.
Thank you. Marco?
Yeah, hello everybody. Also, thanks for having me. I'm Marco. I work for Adidas for now over 11 years, 9 years in payments, and I'm heading the product team. And yeah, from Adidas side, we're very at the beginning with cryptocurrencies, and then I'm really happy to have this panel session and getting more also feedback and infos, and looking forward to talk about this important topic in the payments world.
Awesome. Thanks, guys. So I think to sort of go off of Zhao's intro there, just to really start with the basics, even arguably rudimentary side, let's define what a stablecoin is. I think, Zhao, you started, so perhaps I'll give it to you just to kind of give the audience an idea of what a stablecoin actually is.
Sure, I will talk about how we Circle view this type of technology, but then happy to expand a little bit on the different approaches that there are to this problem. We at Circle, we have been working for a long time. I've been at Circle for 7 years now, and for a long time we have been working with this idea that blockchain technology and crypto assets are a really 21st century kind of approach to settlement and then money technology in general. And so we started exploring initially with the use of Bitcoin, how this kind of technology can be used for settling financial transactions in general, and how that can be applied to several different use cases, including e-commerce, for example. But over time, I think we gravitated to this idea that what the world really needed was for the concept of fiat currencies to be able to run on blockchain rails, right? So the way that we have always approached the idea of stablecoins is that they're more, we call it sometimes internally fiat tokens. So, they are fiat currencies that we are familiar with on a daily basis, the dollars, the euros, the pounds. But how would that work if they ran on blockchain rails? So that's how we interpret it. But I think stablecoins in general maybe have a little bit more of a broader concept or construct, specifically because in general, the goal that people attempt to have is to peg a particular digital asset, right, a cryptocurrency, to some sort of external value, which could be the value of the dollar, the value of the euro, but it could also be the value of gold and the value of some other commodity, right? And there are several different ways to do that. I think our approach at Circle has always been to use this idea of external collateral and full collateralization, right? So if you want to have a digital dollar asset that runs on blockchain and it always has the value of $1, the easiest sort of design to achieve that is to make sure that for every token of that digital asset that you create on chain, you have $1 on some sort of reserve construct that you use to back that on a one-to-one basis, right? And if you achieve that, then you can, and if it's easy to redeem those tokens back for dollars, for example, then you achieve this peg out in the wild, out in the market. That is one approach that's called full collateralization. Typically, it's an approach that involves a centralized entity like Circle in this case to be the provider and the manager of those reserves. There are other approaches to maintaining this anchor between a digital asset and some external asset. Some of those approaches are called algorithmic approaches, right? In that it's a little bit more based on software, and collateralization mechanism can be different as well. So there are stablecoins that utilize crypto collateral, right, which can be volatile in price and value. But if you have software constantly monitoring the value of that crypto asset and how it correlates to a stable value such as $1, then you can sort of achieve the same mechanism. But also you can have all other algorithmics, other algorithmic stablecoins that work in a completely different way, sometimes with no collateral at all, and really having this idea of seigniorage and issuance of equity tokens and debasing of supply, which is a lot more complicated mechanism. And we can talk a little bit more about that because there was a particular instance of a stablecoin like that earlier this year that collapsed dramatically, the Terra dollar. But that's also, a somewhat valid approach that we at least on the Circle side, we don't explore. We think it's interesting, but we don't explore right now. But as I said, going back to summarize, the idea is, what if fiat currencies could run on blockchain? What if you could have digital assets that peg their value to the value that people are comfortable with today?
Yeah, I thought I would try and steer away from the Terra topic just as of right now and stick with centralized stablecoins as opposed to decentralized.
I'm happy to do that.
The point on decentralized stablecoins as well is some of them aren't even using Circle as their backing. Some of their reserves are actually in USDC from an algorithmic side, but I think we need a whole other discussion for sort of the differences and the benefits or negatives from either. I saw we lost Marco. Now you're back. I'm gonna swing a question sort of to you to bring this to the real retailer side. As a brand, as a retailer, where are the benefits you think of actually utilizing cryptocurrencies or allowing your consumers to use cryptocurrencies, specifically stablecoins for the kind of topic of this discussion? What benefits does it bring you by allowing consumers to pay with those?
I mean, as you said, it's all about our consumers. So, I mean, it's something that we're further exploring. I mean, we entered the metaverse and we interacted with cryptocurrency. But I think in general, as Adidas, we want to enable the basically payment methods that the consumers really want to see and demand. So for us, it's additional payment method, additional consumer base. I can really imagine that this in the future will be also one of the main payment method. Of course, this will take time, but to have an early adoption, I think it's important. We also see in our surveys, NPS, that there are customers asking for cryptocurrency, but it's not like the adoption is still very slow, I have to say. But I believe in the future this will become more and more popular. And for us as Adidas, we are consumer centric. We really want to make sure we're offering the right payment methods. It's something that maybe you start with one country to see where is the biggest demand and how it goes. And then, of course, looking into something globally. But from Adidas side, we're offering also many, many different payment methods because we believe this is a conversion rate driver, and this is the same with stable coins. So I believe in the future, there is no way around to not offering it.
Right. So you're basically saying we want to get there, but
yes,
we're in a chicken and an egg situation of
correct.
you have retailers and consumers both wanting to transact in this way. And I guess, Zhao, from the Circle side, you see this, right? I mean, most of the transactions that will be going on, or all of the transactions are going to be on a blockchain ledger, right? So you can see small value transactions going into a merchant account that you might have for Adidas. Do you see a lot of retailers adopting, a Circle USDC payment solution?
We see pockets of that, but I'll explain what we see. But I think it's also important to mention the other way that we think adoption will grow, that I think it's perhaps even more interesting. But what we have seen, particularly in the last 18 months, I think, is a lot more utilization of this kind of technology for payments that were more intimately associated with digital goods. And I know Marco maybe want to talk about that. I know Adidas has been, as he said, deeply involved with the idea of the metaverse and NFT technology. We have seen a lot of adoption, a lot of growth of adoption of these kinds of payment instruments associated with those commerce use cases, right? So if I'm a consumer and I'm interested in buying, the representation of an experience in a digital form, it could be an NFT, it could be an Adidas NFT, it could be a metaverse good, right, on a game or some sort. We have seen adoption because there is an interesting synergy between the digital good that's actually digital and lives on these blockchain technologies, right, being swapped directly and almost autonomously by software that runs on these chains, with digital money as well. And so then a stablecoin becomes a very good fit for kind of being the money for that digital end-to-end transaction that happens in those kinds of commerce situations. So we have seen, with the growth of these NFT marketplaces and metaverse applications that are beginning to pop up, we have seen direct end consumer usage of stablecoins. But I think outside of that, it's still pretty much niche. I agree with Marco's reading. We have the same read. It's very slow in terms of adoption. But what I think the way that we look into the usage of this kind of technology, though, is potentially much broader. I think we look at cryptocurrencies and stablecoins like USDC and Eurocoin today, and we imagine them being directly used by end consumers, right? But I think that style of user experience is actually very limiting, and it has a lot of friction, and we can talk about what those are. But it's certainly not as good today as it is for me to go with my iPhone to a Starbucks, right? Quite honestly, the experience is much more delightful when I use those types of payment methods, and I think that's a big part for why consumers choose to use those in most of the situations, the commerce situations they're involved, right? Using my credit card is still very, very easy. But at the same time, I think people, and Max, you guys are the experts here, right? People confuse a credit card or a debit card with money, and that's not actually money. It's just a credential into where you hold your money, right? It's a credential into being able to use your bank account money for a transaction. And the technology that is involved in utilizing your credit card, your credential, to then get the money to move from your bank account to the merchant through a payments provider like Checkout.com, right? That technology feels like it can very much potentially be disrupted by something like stablecoins. And so I think the interesting scenarios to think about is that we can still have consumers utilize the payment method user experiences that they have today, like a credit card or an iPhone or a tap and pay kind of experience, and still be able to utilize technology like stablecoins, somewhat behind the scenes for settlement reasons, right, and for moving of these funds that need to be moved. And I think we are interested in that sort of evolution as well, and facilitating the ability for developers to build on top of this technology, even though end users don't need to be aware of it from a user experience point of view.
Yeah, I think it's I think we're at the start of the journey. Marco was mentioning Adidas has just started their journey into crypto, but the use cases are more endless. I mean, I think that there's a real use case to be built on stablecoins, which is fine. We're disrupting the Visa and MasterCard network, but they're bringing this into their networks too, for things that haven't really been solved before, such as micropayments, large value payments, are where stablecoins can really drive value. Doing a micropayment of $1 on a traditional payment rail is extremely exorbitantly expensive because of the fixed cost elements that you have when using a blockchain ledger or using USDC is a super important way to fix those fixed costs. And I think on the large payment side, this goes down the road to paying suppliers too, right? And I guess I can spin that over to Marco with what would maybe come first for you guys in adopting stablecoins. Could it be more on the consumer side of allowing them to pay, or is it more on maybe paying suppliers down the road, such as even the NFT artists, creators? And by the way, I did try and buy an Into the Metaverse NFT, and I didn't get one, which was frustrating. But could you see sort of this being one of the use cases that you adopt first?
I think both use cases are valid. I mean, the first one I see definitely on the consumer side. This is where we are focusing, and as you mentioned, we entered the metaverse. But for us, the clear focus is the consumers. However, our assets is something that we value as well, and both cases are valid. And as you said, we're exploring. We really are looking into how can we utilize it, how can we use it. But at the same time, of course, also looking into what our consumers are telling us. And in the metaverse, there's no question. But on the other side, how does it look like in e-commerce? We have our own app. Is it something that in the future we want to offer? Or we have even, membership. For us, membership is a big topic. So why not offering first to membership consumers, so really loyal consumers? There are many use cases where we are looking into it, and definitely something that we should always have an eye on it, and we are doing it. We are even building a whole team, not only for payments, but only for the metaverse world, where we're saying, okay, we need to focus on this, and we should not forget that this is something that is innovative, it's something new, and we want to be there from the beginning.
Yeah, absolutely. I guess the benefits are clear, right? Where do we get to a tipping point? What takes Adidas to bring USDC payments onto the payment method? Is there some point of consumer adoption, ease of integration via some of the payment providers that you work with today? What is it that sort of gets you going? This is something we want to offer. I assume you're exploring it, as you said, but what kind of gets that switch on?
I mean, we have started to talk to the payment providers and looking into the solutions. I mean, as Johan also said, there is also the finance part. We need our treasury department. We need to look into how we reconciliation, settlement files. So there's a lot behind. It's not just like we're offering it. We always need to think about end to end. And this is something where we have a lot of teams involved, looking into the integration with the payment providers. What are they offering? We are working with multiple PSPs on their side, but on the other side, looking into treasury, looking into settlement file, looking into reconciliation. And this is something where, as I said, we're still at the beginning, still looking into how this could work. If this is something that we will offer this year, probably not, but something for next year, definitely something that we want to offer. And then is also the question where we will not do a big bang and offering it in all markets. I think the first one will be most likely we start with a market like US and UK. We also talk to other providers who are offering it, and they see the main adoption really in US and UK. So just to give you an example, Germany is like a buy now, pay later market, cash market. It's a different, payment is very local driven. And this is something where we also need to look into where it makes sense at the beginning to offer it, and then, adopt it and then explore it, and also looking into globally where it makes sense. So I always believe, especially in payments, we need to see the use cases, we need to see the local requirements, we need to understand our consumers, and it's from market to market, it varies. And for example, in Germany, I'm located in Germany. I think we are always in Germany when it comes to payment a bit behind. But this is something that we always need to consider. And I think we will get there next year. It's just we need to make sure we understand the end-to-end process, we understand our consumers and where it makes sense.
Yeah, I think you're bringing yourself back too far. I think Adidas is very far down the line of crypto. There's not many global brands that have launched their own NFT platforms or NFT products, and so you're definitely moving down the path pretty quick. If you're talking about the global side, UK you mentioned, we've got USDC. Zhao mentioned, EuroC. For you here, Zhao, where do you see multiple currency stablecoins coming into effect? Because of course, the way that Circle has been super successful, or one of the ways I should say, is having utility to USDC. People want to hold it. They prefer holding it than dollars because it gives them access to crypto products, but also the ease of global commerce seamlessly, right? And many other ways. I'm sure you can pitch it far better than I can. Where do you bring utility into other currencies that you bring in, such as EuroC, as well as GBP? As Marco was mentioning, UK might be a place he wants to adopt first.
Yeah, that's a great question, Max. I think I will use what Marco said as a segue into explaining why we think that particularly now is a good timing to start, attempting to expand this concept of stablecoins into more and more regions and currencies, because as you said, pretty much in the last 4 or 5 years, it has been very dollarized in nature. And I think it has to do with this idea of a more global perspective on things, right? I think, as Marco said, Germany is very, very specific when it comes to payments. I have worked in the German market for previous Circle products, and I completely appreciate that. It's very, very unique in how consumers and businesses approach payments. But that's not exclusive of Germany, right? In the US, I think we have a very, very good in general internal payments substrate, and consumers tend to be very happy about commerce and payment functionality. And that might be the same case, for example, in China, but China is completely different, right? So the US is very much card rails based when it comes to payments. China has sort of leapfrogged that entire technology stack into mobile payments, unlike a lot of other countries, right? Then you can talk about Brazil and think about a market that is very, very strongly regulated, and or even Europe, continental Europe, perhaps with SEPA as well, that when the regulator says, by the way, the payment systems needs to evolve to this point, everybody evolves pretty quickly to that, and you have like very consistent experiences and consistent improvement. But all of these things make for all of these pockets around the world to be very fragmented and very disparate, right? And so crypto, I think, has shown the benefit and the power of having these global networks where really, borders are kind of meaningless, and you can very easily transact across these regions. And I think a big promise of technologies like stablecoins are really when you start looking into these cross-border or inter-region transactions, right? I think a lot has been developed from the point of view, as you said, Max, of liquidity and utility for particular crypto capital markets, which have been, the majority dollar denominated in the last 4 or 5 years. But now I think from our vantage point, what we see is we are turning a corner into a much more diversified use of this kind of technology, right? Away from crypto capital markets into, early shoots of e-commerce usage, a lot of cross-border kind of transfers interest, and when you expand into those kinds of use cases, then it actually is pretty important to have this sort of technology functioning for as many fiat currencies as possible, right? Because then it allows businesses to understand, okay, how do I move, as Marco also said, how do I move my treasury, right? Because it's not only about dealing with the e-commerce transaction that I'm receiving from my customer base, but how do I keep treasury in all of these different currencies? How do I maintain exposure to foreign currencies? Because it's important if I'm playing in all these different markets. And if you start migrating some of that functionality into a technology like stablecoin, very quickly being only dollar denominated will be limited, and will artificially limit the potential of the technology. That's why we have decided, recently to launch Eurocoin, and we see ourselves launching a number of other products similar to Eurocoin in other jurisdictions in the next 2 years for sure. We also see ourselves partnering with other companies launching this. I mean, Circle cannot and should not be the only company issuing stable coins in this trusted and liquid manner. We think there are other teams building good products in the same kind of design thinking that we have, and we are happy to consider integrating some of these other products as well. The vision that we have for the world, hopefully within the next year or 2 years, is that at least for the G10 currencies in the world, you have a good and sound and trusted and reliable representations of those on blockchain technology. That's in such a way that when you combine that, especially with on-chain implementation of things like foreign exchange, right, and you leverage all this on-chain innovation that is happening across many ecosystems, and maybe it becomes the barrier for entry in terms of swapping dollars for euros on-chain becomes super accessible in a way that it is not accessible today, right? If I'm a business and I want to have exposure and I want to do FX, it's typically something that's very costly and difficult to achieve. We think that will allow this new wave of growth, potentially for e-commerce use cases as well, because as I said previously, I think the cross-border aspect of that use case becomes really interesting when you introduce this kind of technology.
For sure. You said two things that I want to touch on. One is to bring it to you, Marco, and the second on the treasury side and how you're looking at that. But you touched on the fact of China and payments and other people issuing their own stable coins. Where do you guys see yourselves fitting, or even just your outlook on CBDCs? Are these something that you want to get involved in terms of a partnership? Do you see them as a slight competitor to you? Because of course, when you look at somewhere like China, USDC would not be a place where it was welcome. They want to use digital renminbi. So how do you see the sort of playing ground between you two?
Yeah, that's another topic that we get asked very often. I think it's, first of all, central bank digital currencies, they are an interesting concept, but quite honestly, we haven't really seen the materialization of that, at all in the world today. I think maybe China is the country that is more advanced from that perspective because they have a running pilot. But even the running pilot, it's not to the scale that you could really say it's something that has particular relevance today. I think people tend to ignore how important the private version of money is today, right? I mean, especially in a country like the US, most of the transactions that I, as an individual consumer or any business runs on a day-to-day basis, most of them are actually touching private versions of money, right? And I'm talking about prepaid cards and PayPal-like solutions, right? All of these things are like private versions of money, and there's no problem. Nobody has a problem with private versions of money existing, right? That there's a whole set of regulations and constructs that exist in the world today for exactly to allow that kind of private sector innovation. So for the same reason, I don't see CBDCs, being driven by governments as something that will be in opposition with the private version of that, which are solutions like Circles and USDC. I think the likelihood is much more that they are going to collaborate or cooperate, right? Because, as I said, USDC has dollar reserves today backing the on-chain supply that we have. And similarly for Eurocoin, right, the construct is the same. Perhaps there is a world in the future where the reserves for an asset like USDC is the digital dollar version that the government issues, right? And so there can be like a clear collaboration there. At the same time, I think it's very hard for government to operate digital money at the scale that touches retail use cases. And quite frankly, I think outside of China, which is an environment where there's a lot of state intervention and state control, I think in a lot of places in the West, I think consumers will honestly fight the idea of having digital money that is controlled and managed by the government. That gives the government a lot of control, a lot of opportunities for doing bad things that sometimes governments can do. So I think there will be some opposition from the consumer side, to the extent that really the scenario that I see as more likely is a collaborative scenario, right? Where you continue to have privately issued stablecoins, because that's where the fast innovation and the ability to deal with consumers is going to come from. And governments might use this kind of technology just for more efficient, intra-bank, having a Fed account, all those sorts of use cases, and how those can be more efficient with this kind of technology as well.
Yeah, super interesting. let me bring it back to the question I wanted to ask you, Marco, and I'm seeing some audience questions already coming in, which is great, which I'll move on to after. But I guess the first one, how do you think about the treasury side as one sort of side to this? Are you thinking that the treasury is looking at stablecoins specifically, or are you looking at cryptocurrencies in general, such as Tesla holding BTC on their balance sheet? And when you're looking to it, and the other sort of flip side to the coin, when you're accepting consumers or allowing them to pay in cryptocurrency, is there a staged approach? Are you looking at stablecoins specifically, like USDC, then BTC, or are you trying to give that sort of agnostic nature, as Jia was talking about, for your consumers and your treasury?
I think from treasury perspective, the stablecoins is something that we are definitely interested in looking into it. Of course, it's something that is for us more, as it says, stable. So we exactly know what we get. I don't know if you have seen also our results of the metaverse and stuff. It's very fluctuating. So for us, the stablecoins would be something that we are definitely looking into it.
And on the consumer side, would you look to just do stablecoin payments, or you want to give the optionality of, for example, other apps?
It's always good to give the option, but the question is really on the adoption. So, and what if I need to make a trade-off, or I like to have more options for the consumers. Also, when we look into other payment methods, even buy now, pay later, we offer in some markets even more options of buy now, pay later. I believe it makes sense because also from the customer base, some consumers really prefer to have the cryptocurrency one. So for us, I would see is definitely to have beneficial to offer both.
Right. I think that the big intersection, as I guess you're saying in Germany, it's buy now, pay later, is where you have buy now, pay later with crypto, and you're gambling that your shoes will be cheaper later on down the line as the asset goes up. But how you sort of pull those funds is another problem. Someone parking assets, and maybe a conversation for another time. To go to another audience question, because I think you're talking about it right now on the into the metaverse side. Mm-hmm. What do you think about social tokens? And you're talking about your ecosystem and the brand you've created and building a network of people that love Adidas, and you want people to hold the NFTs. What do you think social tokens fit in that ecosystem?
I mean, I believe NFTs is definitely the future. I mean, social tokens, I'm not sure if this will take off like NFTs, to be very honest. I mean, something that we could definitely offer to our customers additional, but at that stage, I would not see a big benefit behind. So it's definitely overlapping with the NFTs that we are offering already. So from my side, I would really focus on the NFTs.
Right. And what's the plan with, which is slightly off the topic of the stablecoin side, but it's interest of myself at least, with the Into the Metaverse NFTs that you've launched? Are you looking to do subsequent feature sets that you get by holding them? What's the sort of plan subsequently for you to be diving deeper into the metaverse, I guess?
I mean, we started quite fast in the metaverse. We launched pretty fast, and now we somehow a bit hold it off, and we're working on a bit more on the strategy on that one. I cannot share too much because there's stuff going on in the background, but for us, it's clear that there is the investment that we want to take. We're building a team only for metaverse, and there's definitely more to come. We have a lot of collaborations like Gucci, but also assets, where we definitely want to also use the metaverse as a platform for our customers.
Right. And on like a regulation piece, to take a complete turn on this, how do you think, Jia, you're in the US, right? You're situated there. So how do you think the regulation is affecting how much you can spend on a stablecoin, how it's being considered? How do you think that either stops adoption and growth or kind of catalyzes it?
Yeah, that's an interesting point, because I think you tend to have very opposing views on that. I think there's clearly a spectrum of perspectives on that topic, and generally you have people who are more pessimistic about what's coming, people who are more optimistic, and then probably what's actually going to happen, which is somewhat in the middle, right? But on the pessimistic side, because people are anxiously expecting particularly what the U.S., which tends to be a leading jurisdiction for money-related regulations, right? I think just as much as Europe, people expect to see what the U.S. will do and then try to adapt and copy in many ways approaches into other jurisdictions. And I think Europe ran ahead a little bit of the U.S. with MiCA and a lot of the developments there, which now are going to take a number of years to be actually rolled out and implemented. But at least there was additional clarity that the U.S. is lacking. It has been lacking for a number of years. So everybody has been very, very anxious about what's going to come out of the president's group and the work that the White House and the Congress are doing. But I think, as I said, there is a pessimistic perspective that it will be very draconian, right? That it will be sort of on the side of curtailing usage and limiting it to only KYC applications and activity and all that sort of thing. It doesn't really matter. It's just an opinion, but the knowledge and the collaboration that we have with the policy work that we do in the US is that that's not going to be the case. It's actually going to be fairly sophisticated in how people think about these topics. And there's a lot of people in policy that are very progressive, right, and want to make sure that we don't kill this technology just in the same way that the internet was not killed 30 years ago, even though there were debates very similar to debates that are happening right now around stablecoins, right? There were the conversations around, isn't this web thing very dangerous, and is it only for pornography and illegal activity? Exactly the same conversations we're having now. And eventually we got to regulations of how the providers of base layer functionality and infrastructure for something like the internet and the web were really protected, right, in a way that this technology could be used for the good use cases that everybody understood it could be used for. I think I'm on that camp. I'm on the camp that people will understand that even though we do have issues, and we have had the issue with the usage of a protocol like Tornado Cash in the last 3 or 4 weeks, and how that eventually got sanctioned because, unfortunately, even though there's a good argument for why things like that should exist and for why privacy of the usage of an asset like a stablecoin should exist, which is a very important topic actually for e-commerce, right? I mean, do people want all of their purchases with Adidas to be public on chain? Does Adidas want all of their volumes to be public on chain? The answer is very likely not. Privacy is an important thing for money flows, particularly in e-commerce. But the way that gets implemented has to be in a particular way, because we have laws and we have regulations and we have to abide to those things. Despite those issues that we have had, even in the very recent past, I still think that the outcome that we're going to have for regulation of crypto assets and stable coins in particular is something that enables this technology to fulfill the promises that we have in terms of how this can be good for the population in general, good for consumers, good for businesses, allow more frictionless value exchange around the world. I'm confident that that's the outcome we're going to have, and hopefully we get to that outcome quite soon in the US.
Yeah, I think you mentioned a couple of good points, right? One is typically to get access to traditional payment networks, ignoring cash, for example, to get access to a credit card or a debit card, you need to be KYC'd by a bank, and so regulators might feel comfortable that user has already validated some form of KYC or AML checks, etc., to be able to transact around the world. So being able to instantly pay with a stablecoin, you can do that in quite a decentralized way. And so finding that sort of middle ground, I think a lot of regulators are trying to say, you can transact up to a certain amount, but could you then spin up another wallet? It's quite a difficult thing to sort of pin down as a sort of, I would still call it a nascent technology. And the other thing you mentioned that was super interesting is imagining in a world where Adidas, Marco turns off Visa and MasterCard and bank transfers, and he's in Germany, SoFort or Ideal in the Netherlands, all these sort of ACH in the US, all these payment methods, and said, I'm just going to allow stablecoin payments with USDC, this dystopian world. If you're looking at an earnings report for a business, it's very easily verifiable to check on chain exactly how many sales Adidas has done in a month, in a quarter, which typically, let alone a private business, but a public business too, will never really want to reveal these numbers. And so something like a Tornado Cash arguably helps to sort of hide the company's earnings while still enabling crypto payments too. A very large question, but I guess something that's definitely something interesting to consider when people are moving towards that. With the current climate that we're in a crypto winter, a recession that's been redefined, but a recession, a crypto winter. It's summer. Obviously, a lot of crypto has got a lot quieter. Trading volumes, everything along this line. Do you see? I'll start with you, Marco, and go to Joao after. Do you, as a company, still feel the same way about pursuing a cryptocurrency vision, given that we're going through another cycle where most businesses have just started looking at crypto now in this cycle, as opposed to sort of 2017? Do you think it's deterred them from wanting to pursue this, or it's sort of just noise and we're waiting for things to pick up again?
It's a good question. I mean, in general, of course, with the current situation, it's not easy, and looking into the whole world for sure. But however, I still believe that we should still have an eye on it. So to just say, no, we are not looking into it would be the wrong thing. I still believe we should look into it. And as I said, we are exploring it, and this will remain. And the situation, of course, doesn't look really, really good, especially in the world. But I would not limit Adidas and saying, okay, we are not doing it, or we are for now pausing it or holding it off. We will definitely continue and invest and looking into options that we can give our consumers. So from our side, even though, of course, the situation is not easy, I still believe that we should look into the future. So in the future, definitely one aspect is the cryptocurrency world. And the customers, we also see that customers are asking for, the adoption is low. Yeah, that's true. But I also believe that this will come more and more over time. So I don't see this with the current situation holding it back. That's at least that feeling that I have. And also from our strategies, we are looking into it and we are further exploring. But on the same time, we are for sure observing the whole situation in the world as any company.
Right. And in this research you're doing, I guess it's hard to put an arbitrary number or sort of a forecast. Say you enabled cryptocurrency payments tomorrow. What do you think would be the adoption in terms of a basket value for consumers to pay? Is it 1%, 5%, 10%? I don't think it would be much higher personally. If you did enable it. And I guess that is converting existing customers. Do you think it's going to bring you new customers who haven't been able to pay you before?
That's a very good question. I'm with you, Max. I believe the payment method share would not exceed the 5%. I would see it probably 2-3%. It depends on the country. Again, maybe US a bit bigger or higher than like maybe UK, or as I said, some markets I would not offer it right away. So I would definitely start with a market like US where the adoption should be higher. I see it below 5%. If you ask me, I don't believe that we would see a drop off in US if we don't offer cryptocurrency. I mean, in US is card dominated. We have PayPal, we have buy now, pay later solution. So I can't believe that someone on our side buying a pair of shoes or Adidas product would say, no, I'm not buying it because we don't offer cryptocurrency. I don't believe it. So I don't see that there's a conversion rate impact, but I see it more from the consumer side. We are offering something additional to the consumer. We're giving him better choice. We also value the consumer and saying, hey, you have now more options to check out. I think it's more also on the consumer side, consumer life value cycle, but also NPS. I think there we would see that as a positive aspect. As a conversion rate and saying a consumer would not pay if we don't offer cryptocurrency at that stage, at that moment, I don't see that.
Yeah, I agree. Yeah, sorry, I said I would ask you as well on the crypto winter side. I know we only have just over 5 minutes left, but it's an important point that you guys are obviously at the forefront of the regulation side and certainly at the crypto winter side. So please Let's hear your thoughts.
Yeah, I think honestly, I think I'm a optimistic by nature. I think you can gauge that by some of the answers I gave. So I'll give an optimistic answer again. But I think I have lived, and Circle certainly has lived through a couple of crypto winters before, and we think ultimately it's a good thing because the what's the term that people use, right? The irrational exuberance that was happening in the last 12 or months or so. It hides a lot of bad stuff, a lot of bad ideas, unlikely to succeed kind of business models. It hides a lot of that just because of the abundance of availability of capital, right? So I think crypto as an industry was receiving investment from venture capital and from other forms of capital source that was just very, very abundant. And so, there were all these ideas, being experimented, and there was basically unlimited capital being deployed to kind of explore all those ideas. When you have that sort of situation, it's not as much of a capitalist world anymore. It's like a free for all. Everybody can try anything. And it creates like some of the monsters that we have seen them collapse earlier this year, right? I think going back to basics a little bit more, and the situation that we are right now, where the dollar now is not in an inflationary period. I mean, from the supply point of view, not talking about consumer inflation. The supply is not growing as crazy as it was growing before. And a lot of crypto assets actually have an inflationary supply. So it's quite natural that a lot of capital would outflow from crypto back into more traditional investments. That's the rational thing to do in a period like this. So I think all in all, when you combine those two things, I think you will see a more rational industry phase right now, where if you are an entrepreneur or a developer, you have an idea you want to explore, that idea will be tested a lot more before you actually get capital to try and explore it, right? And that is a good thing. So I think the proliferation of more diverse use cases for something like stablecoins is something that we expect to see now during this phase, because investors are not going to be happy with somebody saying, I'm going to generate, another protocol, and there's liquidity mining, and then this is how we're going to create money. And people are like, no, hold on a second. Like that seems like it's not going to work. Versus an entrepreneur that says, I want to explore the use of stablecoins in e-commerce use cases, and this is how I'm going to think about it. That's a much more real world kind of scenario. I think we're going to see the investment shifting to those kinds of better and more concrete ideas. And I think that's a good thing for the industry. So, it goes in ups and downs. We have seen cycles like this before. And I think the entrepreneurs and the businesses coming out of this phase will be the stronger ones, which is a good thing for the industry.
Okay, thank you. I realize we are coming up for time, but there seems to be an Elon Musk question that seems like we can't not ask. Elon Musk was wanting to accept Bitcoin and Doge for all of his products, right? What do you think changed his mind in not allowing this as a checkout method?
I will not take a guess, but I think Elon has got himself into trouble with announcing things on Twitter and then having to having to actually execute on those things. I know at least that he genuinely believes in some of these technologies around crypto. He also is a very massive critic of some of the other types of technologies, and I think he has an opinion in the space that honestly should be listened to, because I think in the early days of PayPal and how he was working on this kind of problem, he has had very, very good thoughts about how you bring money into a digital era, and he knows the challenges, and he knows quite frankly a lot of the BS that some people propagate in this space, and just people who don't know what they're talking about. So I think it's important to hear about what he says, but I think honestly also I'm not a fan of some of the currencies that he defends. So I will not emit an opinion on that particular incident right there.
Well, I mentioned two, so I assume it's the other. We're running up to time. I guess to do a sort of a wrap-up question for people that have listened in, if you had to give advice for merchants on a crypto strategy, Marco, you spoke about stuff not happening this year, moving into next year. And Zhao, you're building new products for all merchants from different stable coins to different treasury solutions for merchants. What would be advice from you planning sort of Q4 to go into the new year about their crypto strategy? Whoever wants to take it first. Zhao, you're unmuted, so you can take it.
Okay. Just to recap and understand exactly what you're saying, an advice for example, merchants.
Yeah, for their crypto strategy, whereby it may be enabling cryptocurrency payments in 23.
Okay, that's an interesting one. I think my advice would be, particularly for merchants who have exposure to a global customer base, right? To, as I mentioned, particularly if you as a merchant, you feel the pain of accepting cross-border payments or having to make cross-border payments to your suppliers. If you are at that cross-region or multi-region scale, I would invite them to consider 21st century technology to address certainly the pain points that they're going through in terms of the efficiency of capital and the cost of transacting in that environment and the length that it takes to settle those transactions. Stablecoins, they still have multiple challenges that we're working on addressing. I mentioned a couple of those, right? They are related to privacy. They are related to the still regulatory gaps that we see being filled soon. We are working on interoperability problems as well to make sure that stablecoins like USDC are as easy to use as possible by a developer at a merchant, or by a payment service provider like Checkout, so that they don't need to think about which chain these assets run on. But I think despite all of those problems that we are certainly very dedicated towards solving, considering, as I said, why wouldn't you use 21st century technology to address some of those cross-border problems? Because I think it's time, and I think it's as good a period as ever for merchants and payments entities in general to consider this type of substrate for those problems. We have lived for far too long, I think, in a digital era without having true digital money, and we are as close as we've ever been to having true solutions for that. So I think if you are implementing payments solutions in these teams, I think having a crypto strategy and a stablecoin strategy in particular is absolutely a must.
Thank you. Marco?
Yeah, I mean, coming from the merchant side, as I said, it's early days, but I still believe that, as Joe also mentioned, the pain points about cross-border, but in general, I think we always need to think about our consumers, and it's early, the adoption is slow, but I still believe we should already start looking now into the strategy, because what we as a merchant often do, we are waiting very long until the trend is there, and then we are jumping on the train. So I believe as a merchant, we should always look ahead and look into innovation and look into, as what Joao said, there's a new technology coming, and we are in the digital world, and why not using digital money? And I see the same way. I think at some point there is no way around. I think it will come more and more. And from Adidas side, we don't want to be the late to the party, let's say this way. So I believe adopting it and introducing it in the ecosystem in the early stage would also show the trust that we gave to the consumers and saying, I give you another option. And this is something that is coming for the future. So from my side, the advice is definitely for next year to look into it, to explore it. Of course, looking into where it makes sense, for especially on a country strategy. So I would, again, not start in every market or every country, let's say, as we talk like Germany or some small European countries. But I believe that we as a merchant, we should always look into what is the consumer looking for. And I think where we now live in this digital world, this is something that the consumer is also looking for, that the merchants are giving the right choice to the consumer. So that is just my advice, to not lose this trend that is coming.
Yeah, I think to summarize sort of those 2 points of trends as well, I mean, Jiao, you briefly mentioned sort of the adoption of web and internet. There's like my favorite curve that I look at is sort of the internet usage adoption sort of increasing over time, plotted very nicely with sort of crypto adoption. And they're following a perfect trend of sort of getting to that hockey stick growth later down the line. If it's next year, fantastic, or later on. And on that, I will say thank you very much for joining, everyone listening in, our expert panelists for speaking to us today, and all the insightful questions that came in. And I will look forward to seeing you guys on the next virtual session. Look in your inbox. We'll be sending some links to how to watch this on demand. And thanks very much. Cheers, guys.
Thank you.
All right.